GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar where we're looking at some of the major asset classes being covered in markets. And so you'll notice on the screen I've got Ethereum up. I will talk about that in just a minute, but the normal course of action is that we'll cover some of the major Forex markets and commodities and a bit of Bitcoin and the S&P 500 as far as indices go. Let us know if you want us to cover anything else. Ethereum was something that had been requested given the strong price action going on there, lots of movement going on in markets. So if there's another one you're interested in, just let us know. And if you're enjoying these videos, just click the like button. It really does help us spread the word. So let's jump back to that Ethereum chart. There it is. So this is the weekly candlestick chart. And so this is a pretty textbook double bottom. There's the bottom, there's the neckline, and you can see we broke up, tested, and now we're surging up, and you can see as of today there's been a weekend gap and we've gapped up, and we're now comfortably above $500 in Ethereum. So breaking out into a new uptrend, which is was certainly positive for not just, I would say, Ethereum, but it's positive for all cryptos, including potentially Bitcoin. Although one factor you have to keep in mind is that all the cryptocurrencies are sort of competing for the same dollars in a way. So obviously there's new money coming in, but then there's the same money and they're switching between cryptocurrencies. So given the big surge we've had in Bitcoin, it's possible that Bitcoin kind of steadies a little bit. Maybe we push out to new highs first, but it's possible that Bitcoin steadies while some of these other cryptocurrencies, these other altcoins, catch up. Also worth noting, just to kind of back up the idea, is it's also a fairly classic, not at the bottom, not quite so much, but a fairly classic cup and handle pattern, a big swooping bottom, which is the cup, and then just this is like a little handle here. So it's the kind of cup and the handle. So yeah, a lot of reasons to think this looks fairly bullish for Ethereum. Where can we buy in if we believe in this bullish trend? Well, this is the big gap here. If we got a filling of this gap, that would certainly provide an opportunity. And then here's the neckline. So these are kind of our lines in the sand. The gap filling would be fine, although it does look like it's a kind of breakaway gap. So maybe a more aggressive entry is just back near the entry, near the end of the gap there, or you could wait for a more conservative, better risk reward down here. And then again, if you're below this neckline, then you probably want to reassess the kind of bullish outlook in general. So a little bit on Ethereum to kick things off, but let's jump back into the normal course of action where we normally start with the currency markets. Euro dollar is still grinding up between up into that 119 level. Last week we had mentioned the pullback to the moving average, and we pretty much grinded right back up, and you can see we're stalling around under 119 and also at this long-term declining trend line that I like to show you every week. So starting to look more positive. On a fundamental note, I would just quickly, I won't go into too much heavy detail on it. We did put some commentary on it in our daily research note, that the EU Recovery Fund is being stalled at the moment by Poland, Hungary, a couple of other Eastern European nations, but once that presumably finally gets approved, that means the money starts, they start raising the money in the debt markets, and the money starts coming through in a not too distant future through to these member states, and that pushes up the economy. And obviously the markets price all that stuff ahead of time, and so just that EU Recovery Fund getting that final approval and activation, that could be one catalyst for how the euro actually breaks out to the top side here. So look out for that bit of news as some kind of confirmation as to why we can actually get through 119 and then 120. So basically we're waiting for the 119 breakout in summary, and so hence I'm not going to dig too much down into the details. Where I think there is some more interesting action here is you can see sterling, obviously Brexit always front and center. The mood seems to be generally fairly positive. No final deadlock, but we have heard talk about landing zones, etc., which is sort of trade deal speak for they're pretty close. And you can see here that we're up through 133 comfortably, and we pulled back from 133 to 131. We had a 200 pip pullback, and we've moved straight up into the top of the channel. And so it looks from this action that we didn't come down and test the bottom of this channel again. It looks like we're accelerating in terms of trend momentum. So it looks like this. Maybe we double top. So let's look at our weekly chart. 134 has been heavy resistance, but it certainly looks promising. If you look at the last few times we got up near 134, there've been some big old steep declines. There was the last time, obviously, but we haven't taken out that low, and we're up near the high. It's certainly suggestive of a break to the top side, and given how stiff a resistance this has been at 134 up through 135, then maybe there's going to be a short-term pullback. Look for those opportunities if you're looking to grab 50 pips. But otherwise, bigger picture, it looks like we're on course for a move to the top side and a more substantial uptrend in the pound against the dollar. Dollar yen is painting a similar picture in terms of dollar weakness. Here's our trend line that we've had in place for a while, still pretty much intact. And then just our kind of longer term zones that we're kind of toying with at the moment. Shorter term, this is where we round into our trend line. We've double topped. We've come down through 104, and we're just stalling around 103.70 as a floor at the moment. This doesn't really look like a bottom to me, but I could certainly see how we do get some kind of bounce. I think there's opportunities to be had if we get a close intraday below this level, because it's quite well defined, as long as it's not too low where it just ruins your risk reward. If it is, you probably need to wait for a pullback. But if you get a moderately decent close below this line, that is an opportunity in line with this overall weakness on the short term that we're seeing, and also the kind of longer term downtrend that we're in place. And if we do take out 103, well, I've mentioned a few times, there's not much in the way of support down towards 101 and then 100, which is this low down here on our monthly chart. And then taking out 100, well, we're not there yet, so not much need to discuss it, but potentially big moves to be had to the downside, unwinding all this Japanese QQE. And remember, we've got a new Japanese Prime Minister now, which is kind of interesting. I almost think that markets are looking to gradually test the conviction of the new Prime Minister and how far is he willing to go in terms of these fairly extreme fiscal and monetary policies that they're doing in Japan, in terms of the amount of buying of bonds and stocks, etc., in their QQE program, etc. Right, let's jump over to the Aussie dollar. This has been a bit more dull of late. We have barely done anything since last week. We broke to the top side of the triangle, and we've just been stalling. But in line with what we think is happening in the pound and the euro, where we're looking for a potential topside breakout here, it kind of makes sense that the Aussie can do well too. It's not quite you've got a few more virus cases in Australia this time around, but it's still generally viewed that Australia kind of managed to dodge the worst of the pandemic. And so if you still think that's the case relative to the United States, which is potentially in for a pretty tough winter of lots of rising cases, potentially new lockdowns happening in the United States, if that all starts to kick off and weigh on the dollar, the Aussie would be one alternative if you're thinking in terms of kind of the virus situation. And this looks triangle break, rally up, pause before the next break, potentially, is what we're looking at here. Short term, you can just see the resistance in place there. We tried a little move below that, didn't work out. We've stalled at this resistance. We're at the fourth test at the moment, so what I've mentioned quite a few times, that fifth is often the time lucky. So maybe we get another little pullback and then a final break. Let's see. Moving swiftly on to gold, it's A very interesting market to trade. You occasionally get these heavy sell-offs, but what's been so fascinating this time around is that this 1850 support has just held so well, and so again, not really materially much different in terms of what we said about last week, and what I generally suggested, which was just trading the bottom and top of the range in terms of selling at 19 and buying at 1850. That has been generally the right approach. We're going to get some move to the top side eventually, or to the downside rather. We're going to get a breakout eventually, but we're not quite there yet. Does 1850 hold? Looking at the strength of these down moves, you would think so. You would think that 1850 is going to give way. But the fact that it hasn't so far does suggest there's strength in the market. There's basically two things that are either happening here. This is a long period of distribution from people who've been long gold throughout the year and done very well from it, and there's new buyers coming in at 1850 defending the bull market. So there's obviously two competing forces there. There's many reasons to want to be buying gold at the moment in terms of a hedge and as a haven and as a protection against dollar weakness, etc. But nonetheless, we've come pretty far this year, and we've seen some big downdrafts. So maybe that selling just had to come out of the market, and we've absorbed it, and we're about to push to the top side again. That's what's happened on the previous sell-offs. Whenever we got that stretch of weakness, eventually the market came back again. But we theoretically really are due a bigger pullback. And I think if at this point, because 1850 has held for so long, if we do break, I think that will be a pretty good opportunity on the downside for a more extended sell-off, probably past the 50-week moving average. It wouldn't hold like it did last time. We'd get a much bigger correction, potentially right back down to this same level again, around 1500 or so. But it's interesting to try and predict, but ultimately you don't need to predict what's going to happen in terms for your trading success. You just need to look for that breakout. If it happens, go with it. If we hold the level again and we start trading to the top side through 1900, well, obviously then we're looking distinctly more bullish. Okay, let's flip over to oil. This is looking promising. Now I'm on a daily chart here. Look at this trend line. We've been drifting lower in momentum, but as of the last couple of weeks, we've had a bit of an upward spark in momentum, and you can see how the speed of the sell-offs was definitely sharper than the inclines. With that deep sell-off there. And the rallies up have been more muted, but not in the last couple of weeks. The rallies have been much stronger, the sell-offs have been more muted, and now we're pushing up through 43, which is something we were talking about last week. We held 40 again, the round number. It looks like 40 has been survived, and you can see we pulled back to 40, didn't even need to get to 40, tested the top side of this broken declining trend line, pushed out to the top side, and it looks like we're breaking out here in oil. It's not the greatest risk to reward. You're literally buying at the top of the range, but it looks like we're breaking out. So I think the idea here is look for the best risk rewards you can. Ideally you want to see some kind of pullbacks. We're right at the resistance at the moment. It's in terms of breakout trading, this is obviously the time to buy, but we are buying right into a resistance is often a recipe for disaster. So if we can get some kind of pullback from this strength, maybe we have to take out the level first and you actually miss the initial breakout, but then you get a pullback and feel like you're buying into some weakness, into 43 perhaps, then that might be the opportunity if indeed we are getting a serious breakout here. And if we are, again, we've been consolidating in this area for a while. Oil dropped so sharply on the way down that probably we get I would imagine, a pretty tidy move up through 50, through 51, I even think, and find eventually come to a rest somewhere a little bit around in the kind of 50 to 51 territory, which is obviously round numbers, and it's where we were resting before the big drop in the early stages of this year. So potentially some very interesting moves going on in both gold and oil. They've interestingly going in different directions at the moment. So we'll have to see, whether they continue to diverge or whether in fact maybe gold moves up with oil or oil rolls over the gold. Okay, and our other cryptocurrency for today, I mean, this is our daily chart, and we can see that it's just gone parabolic. In Bitcoin now, we're just well overbought, and obviously we said this in last week's webinar. We said we were overbought. Let's remind ourselves where it actually was. So this is, we were, let's go back to where was the price? We must have been at, yes, yeah, it was there. Right around here, short of 17,000. And we were saying, well, the market's definitely overbought. And it continues to be overbought. I mean, that's what happens in an uptrend. It stays overbought. And now we are up near 19,000. Not quite got to that 19,000 mark. It's about here. And then obviously if we if we go back to our probably weekly chart would do it. We can see how close we are to our record highs, right about there. 19, I think, it depends what chart you're looking at in terms of what the actual top was, but 1900, 450 or so on our charts here in terms of record high territory. I think in some direct Bitcoin exchanges it was like closer to, it was like 19,700, something like that. But clearly price action very bullish at the moment, and leading what's happening in Ethereum. So if we want to guide for what could be about to happen in Ethereum, we could start looking at this Bitcoin and think maybe that's to come there. Clearly the market's a very, it's a strong market, and when it does finally roll over, the speed on the way up is generally matched by the speed on the way down. So be careful here. Just remember you're buying into strong momentum. The momentum can change direction and catch you out. But if you have an exit strategy in place, then you should be, that you're protecting yourself as best you can. So nothing. I mean, what else can I say here? It's a very strong market. Oh, one thing I did want to say was that this is a basis for our current kind of speed. You can see that we had a little attempted breakthrough, but then we eventually came back and retested. And this trend is kind of what we're working off at the moment. If we give way through that trend, look out for a move back towards this slightly more stable longer term trend. Maybe that could be a buying opportunity, depending on how quickly we get there. It could be around 1600 or so. And last but not least, let's have a look at the S&P 500. Still interested by this rising trend line. I'm more expecting it just to kind of get blown away more than anything else, with a series of closes above it, and we can kind of forget about it as a concept. But for the moment, these weekly, we're pushing up in the week, and we're getting sold off from highs of the week. That's happened in the last 3 attempts at pushing through this rising trend line, so it just keeps it being interesting to me. The market's bullish. I assume we're going to keep pushing higher, but I'm certainly intrigued by what would happen if we start to get a deeper sell-off, given the potential significance of this long-term trend line. Here's our daily chart, and you can see held our support, rallied up recently, took out that high. This high was sort of we're also kind of working our way through that one as well. Kind of dip through it, attempting it here. So yeah, we're chopping around. We're going sideways. We're in the midst of a dip. So maybe not in terms of that high, but you can see that basically we've held this support pretty well, and we're bouncing off it at the moment. So actually, in terms of buying in some weakness, we've had the weakness. We're actually getting a little bit of confirmation to top side, so like futures are pushing higher at the moment, so potentially not a bad area to jump in on the short term if you think this trend is still to the upside. Otherwise, I wouldn't put too much stock on our 50-day moving average. We're pretty much in a range. If we give way on this high, I'd tend to think that maybe we come right back down to the lows again. Alright, that is it. Thank you very much for watching, everyone. Good luck trading this week.